Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market preparation video for April 26th, 2018. So we have certainly had an odd earnings season. Really kind of bizarre. It kind of reminds me of that old Seinfeld episode of Opposite Day, where everything just seems to be kind of opposite of what you would expect. It really started off right at the beginning of this earnings season when, big banks reported strong earnings, and we gap up and find sellers. That's translated into a lot of things here recently. Caterpillar reports earnings, gap up, find sellers. Cree had good earnings, gap up, find sellers. It seems like the trend for this season is if you report good earnings, plan on being punished. So it's kind of been a really challenging season. And where do we go from here? It seems like this road is just full of potholes. And I wrote a little bit about that this morning in the morning note. If you guys have never read the morning note, look in the description below. There is a link to go to the morning note. But kind of an interesting day, to be sure, or an interesting market, to be sure. Now, this morning, we're looking at, we've had a slew of really good earnings after the bell yesterday and so far this morning. And futures are currently looking for a gap up of just right around 60 points. But you would think with the strength of the earnings, we'd be seeing a lot more of a pop higher. And we're just not getting that. There just seems to be a lack of enthusiasm by the bulls. So, you know the old saying, fool me once, shame on you, fool me twice, shame on me. Do we want to engage in chasing this bullish pop this morning with so much uncertainty in how the market will react? It's kind of an interesting dynamic to have to deal with. One of the things I want to bring your attention to is if I'm gonna pull up the Dow, and on the Dow, if we were to measure from right here, okay, the lows, and actually let's just go from here, from where we are about right now up to the swing high here in the Dow, we're looking at 850 to potentially around 950 points if we count that tail of yesterday from our swing high. From where we are right now, we're only about 700 points from the swing low. So here we set in the middle, and we have this conundrum. We're getting these great earnings reports, but nobody seems to care. And the question is, which one of these forces is pulling the hardest on this market? And I got to tell you, for the moment, I have to give credence to the bears. The bears, why we continue to hold below downtrends and hold below the 50-day moving average, I have to give the bears the edge here. And any kind of a signal of selling that could come in, we could really swing hard to the downside. So be kind of careful how you proceed in this market. Watch yourself carefully. Plan your trades carefully. Plan your risk. Can we really trust that kind of a weak bounce that we had yesterday? And I'm going to vote no, not yet. I need to see a little more follow through. I need to see a little more confidence in those bulls to suggest they're actually going to hold this as a higher low. And right now, we just don't have that. So be really careful. We're in the same situation in the SPY. We're kind of dead center here. We're trying to figure out where we're going to go from this point. We're underneath the downtrend. We're underneath the 50-day moving average. So I have to again say the bears have the edge right now in this market. And the same would be for the Qs. The Qs, a sad situation. We're actually closer in the Qs to the April lows than we are the swing highs. And there may be pressure coming on Apple again today. Samsung reported a massive decline, maybe about a 50% decline in mobile handset displays. So that'll be interesting to see if Apple gets a little bit more selling going on today, and it's been really dragging heavily on this market. Also, of course, the concern is we've seen interest rates kind of ticking higher toward that 3% area. That's certainly weighing on the market right now. So we just have all of these issues kind of hanging around us like a weight around our neck, and it's hard to know which side of this is going to pull on that market. I want to say that good earnings should move us higher, but that certainly hasn't been the case so far this season. IWM, the strongest of the indexes, holding above the 50-day moving average, even though it's had some really strong tests here, and we have dropped below this kind of significant level. So we need to push back up here pretty hard if we're going to pop back through there and hold on to that bullishness here in IWM. So watch that closely. If we take a look at the VIX, the VIX is also just a little bit confused. We started to break this downtrend here in the VIX, where we have the potential of really firing higher here. But not so much. We popped up there, a little bit of worry, but we held off yesterday as those bulls kind of, had a weak response to the lows yesterday, but we did rally up off of there. So the question is, we're in this midpoint here, in this wedge pattern, holding above support, holding below the downtrend. Who wins this battle? Boy, it's going to be a tough decision here. Lots of tough decisions have to be made by traders right now. Which way are they going to land on the price action that we're being faced with right now? Let's take a quick look at T2122. T2122, that 4-week new high, new low ratio. And you can see here again, we're kind of just stuck in the middle. Stuck in the middle on the indexes, stuck in the middle on the 4-week new high, new low ratio, stuck in the middle on the VIX. Really a tough place to try and make a decision as to what you're going to do for your trade. So my advice to everyone is to just be really cautious. Be careful how you address this market over the next couple of days. As we head toward the weekend, there's just a lot of question out there. A lot of just kind of ambivalence in the market. Be really careful. Plan your risk carefully. Don't take exorbitant risk. Be careful chasing, and always be prepared for whipsaws and potential intraday reversals when we're kind of stuck in this middle range like this. One side could easily gain the upper hand. We could easily rip higher or rip lower. So I'm not trying to make a case for either one, just that we're really in a conundrum right here as to who's going to gain control or gain the upper hand. So be careful. With that, everyone, I want to wish you all a fantastic day. If you decide to trade, just make sure you plan carefully and have a good exit plan, and you remain flexible. Don't have a bias in this market because we are stuck in the middle. If this is the first time you've seen this information, these videos, please do me a favor. Click on that subscribe button on YouTube and the follow me button. They're on Facebook. Click those subscribe buttons and please feel free to drop a comment. I really appreciate those. You guys have just been fantastic, and thank you for that. Feel free to share this video with any friends and family that you might think could benefit from this information. So I want to wish you all a very, very good day. I want to wish you all great profits. Be careful today, everyone. Be a little bit cautious as you approach this market, and we'll talk to you all bright and early Friday morning. Take care now.